This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
I'm sorry, it's a boom economy, and that's what we're adjusting to.
Neither party seems to want to take on deficits at all.
With Lisa Mateo on markets.
Stocks are coming off of another record high.
And Michael Barr with news.
Tensions between the U.S. and China have heated up even more.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good Tuesday morning from the Bloomberg Interactive Broker Studio in New York City. To our worldwide audience, we're also streaming live on YouTube, so you can head over to youtube.com, search Bloomberg Podcast, and that's where you'll find us. Tom Keene off today. David Gura sitting
back.
Man, a professional broadcaster. Classing up the joint a little bit. We appreciate David hanging out with us for the next couple hours. Lisa Mateo as well with our business flashes and all the news and all that good stuff here. Coming up, we're going to talk to Michael Purves. He's the founder and CEO of Tallbacken Capital Advisors. Get his thoughts on these markets. Ross Mayfield, investment strategist at Baird. He's also going to join us on these markets. And we're going to talk a little real estate here, residential real estate. Lisa Sturdivant, chief economist at Bright MLS. What's happening in the real estate market, the residential real estate market? I mean, we've got the 30-year mortgage still 6.5%, close to 7% here. So if you own a home and are thinking of moving, what's the incentive if you're sitting on a 3 or 4% mortgage to go out and buy a new home at 6 or 7%? Doesn't seem to be making sense. That's a problem for the real estate business. So we'll get all into that over the next couple of hours. And then I believe at 9 o'clock, it's Matt Miller, Shonali Bassett going to be joining me.
Not
for the
us.
next 3
That's the
hours.
most important part.
Exactly. So Matt Miller apparently going to be making a presence here. So we got a lot going on this morning. We'll stay on top of these markets. A little bit of green on this screen here. Let's go to Lisa Mateo. Get a Bloomberg business flash, Lisa.
You got it. And right now, futures pointing to modest gains. This is after yesterday's weak showing on Wall Street. Right now, NASDAQ futures up about 0.4%, 87 points. Dow futures up 0.2%, 111 points. S&P futures up 0.3%, or 20 points. We have the 2-year yield at 4.23%. That's little changed. And the yield on the 10-year 4.52%. That's little changed as well. Keep in mind the bond market closes at 2 p.m. Wall Street time today. Meanwhile, markets in Germany, Italy, Switzerland, among those closed for New Year's Eve. Shortened sessions in London and Paris. Japanese markets closed through January 6th. Over to currencies. We have the Bloomberg Dollar Spot Index. That is little changed. We have Japanese yen, little changed. Euro, same there. And the British pound, little changed as well. Bitcoin up more than 2% at around 94,000. Speaking of that, shares of MicroStrategy. That's the tech company borrowed heavily to invest in Bitcoin. They're up about 3.5% after sinking more than 8% on Monday. Then you have Tesla shares rebounding after a 3-day sell-off, up more than 1.5%. Tesla actually expected to release fourth quarter full-year deliveries and production figures this week. Checking in with other members of the Mag 7. Why not? Amazon up more than 0.5%. Apple up 0.3%. Then you have NVIDIA, Microsoft, Alphabet, and Meta up 0.5%. That is your Bloomberg Business Flash. Paul and David.
All right, Lisa Mateo, thank you so much. We appreciate that. David Purves David Gura sitting in for Tom Keene. See, Tom goes away sitting in a cafe in Paris with a beverage of his choice.
I hope so.
Maybe a cigar. That might be happening, and just kind of watching, taking it all in. But he'll be back at some point, so I'm told. All right. We're here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube as well. Michael Purves joins us. He's the CEO and founder at Tallbacken Capital Advisors. Hey, Michael, it's been a heck of a year for risk-on investors, particularly on the equity side of the ledger, people making 20-plus returns here. How do you think about the beginning of 2025? I mean, some of your clients might be getting a little used to this 20%+ returns. What do you say about 2025?
Well, look, it's hard to be too bearish, given that the economy is strong, will probably stay strong, earnings will probably be pretty good, and we have the Fed doing some sort of easing into a very low unemployment rate and at a sort of a resilient GDP. That's sort of textbook. Yeah, you need to be allocated into risk assets such as equities. But it comes with a lot of caveats here. And I think certainly the ability for a three-peat of double-digit gains across the major indices is going to be very challenging for a couple of reasons. One of which is that look, if you look at a long-term chart of the S&P 500 over the last 10 years, you'll see it. So this is a technical comment here, but I think it's important is that we're right at the top of that sort of channel. You can't really do this on radio, but if you pull up a chart, and I can send it to you after the show, but it's a great chart. We are at the top end of that channel. Usually that sets up some choppy or weak behavior, at least in the coming months there. And of course, we're at the top of that channel at a very expensive valuation here. And then the third factor here, that why I think there's going to be choppiness for the next few months here, is that we have a U.S. political risk premium that needs to be priced. And what I'm talking about is we just simply don't know where the art of the deal is going to take us here, right? We just don't know. Markets like certainty, but the art of the deals is predicated on sort of a lack of predictability from the commander in chief here. So that will have to be ultimately priced. So I think, you'd like to expect a lot of, we must own U.S. equities because the U.S. is about best house on the block. We've got the Mag 7 earnings machines and all that usual stuff. But I think it's the allocation into the U.S., I should say incremental allocation into the U.S. in January and February may be a little less robust than might otherwise be the case, because we just need to see what Trump is going to lay out for us, and what the are things like tariffs that are aggressive, what the counter response is. There's a lot of unknown unknowns and known unknowns here to consider, and that really needs to be priced by equities there. So I think some valuation reset is likely to happen in the next few months.
Michael, great to talk to you. We'll allow the technical comment here on this New Year's Eve day. But let me ask you just about the amount of volatility that we're seeing and likely to see. It's something that I always turn to you for, just insight into volatility. And so what are you looking for here as we wait for that pricing of the political risk and all of this to unfold here in 2025?
Well, you had a huge spike in volatilities with the FOMC in December. And then after that jolt, you saw the VIX really collapse, and you also saw the MOVE index, which is the VIX for the Treasury curve, sort of collapse to basically the lowest level since the Fed started hiking there. I think the MOVE index is the first thing to focus on here, just because it has been, really low, and I think so much of the Trump story, or the fiscal policy unknowns that we were just talking about, it really comes back to the bond market almost before the equity market here. And so if we do see a real escalation in the term premia, and we've seen this sort of slow, steady sell-off in treasuries across the curve really since September, if that continues and we get to 5% and beyond, and we start seeing a lot of anxiety as to what the Fed's response is going to be to White House policies and so forth, you're going to start seeing Treasury volatility up at higher levels there, and that will ricochet into the VIX. So the VIX right now, is I would say not particularly cheap, not particularly expensive. It's not like, oh my God, it's like the markets are wildly complacent here. But nor is it like, one of those things where the VIX is at 35 and it's sort of like, okay, well, this is yet another inevitable volatility spike.
Mike, what do you expect this Federal Reserve to do, over the coming months here? I mean, I think the market's kind of priced in maybe a couple of rates cuts next year. Is that kind of in line with what you're thinking?
Yeah, I mean, look, the Fed, I thought, did something that was awkward but good in the December meeting. I've been on the view that we are in the middle of a shift to a higher nominal GDP condition. I didn't understand why they had to do 50 in September. To me, if they did 2 cuts this year, that would have been plenty. And I think the Fed is sort of, when you go through what the economic projections were sort of telling us out of that December meeting, the most important thing I think is that they meaningfully raised their real rate Fed fund forecast over the next 3 years and in the long run without changing their GDP or employment forecasts. And so I think what they're sort of saying is that the economy can actually accommodate higher real interest rates. And we've certainly seen many economic expansions over the last 40 years that had much higher real interest rates than we have had now. And so I think, they've been going through this mental exercise of, are we normalizing to 2019 type of real interest rate environment, or something perhaps before the 2008 financial crisis? And I think it's more the latter here. And I think that's what's happening, just because there's so many structural forces that are pushing upward support on growth and inflation.
Michael, thanks so much for joining us. Always appreciate chatting with you. Michael Purves, he's the CEO, and he's the founder of Tallbacken Capital Advisors. Again, futures slightly higher today. The S&P up about 0.4%, with our news in New York City. Here's Michael Barr.
Thank you very much, Paul, David, and Lisa. The U.S. Treasury Department was hacked earlier this month by a Chinese state-sponsored actor through a third-party software service provider. According to a letter the agency sent to Congress, the Treasury Department described the intrusion as a major cybersecurity incident. It is said the hacker gained access through software provider Beyond Trust to a key used by the vendor to secure a cloud-based service. More details about the funeral plans for former President Jimmy Carter, who died Sunday at age 100. He will lie in repose at the State House in Atlanta, then at the Carter Center, where people can pay their respects. Karen Ryan worked with Jimmy and Rosalind Carter as their senior advisor.
We're sad, but we're, one thing about him is he didn't like any of the adulation. He would be like, okay, we'll get back to work.
He will later lie in state at the U.S. Capitol from January 7th to the 9th. A team from the NTSB is joining South Korean investigators at the scene of one of the worst aviation disasters in history. Aviation analyst John Nance doesn't expect quick answers about the commercial jet crash Sunday that killed 179 people on board.
As a matter of fact, I wouldn't be surprised to see a final report take a year. By the same token, we will know very rapidly what some of the major factors were.
Analyst John Nance spoke to ABC. The U.S. and people around the world will celebrate New Year's Day. There's, of course, the ball drop in New York City. And in Atlanta, large crowds are expected for the peach drop. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Paul, David, Lisa.
Michael Barr, thank you so much. We appreciate that. The peach drop. Everything in Atlanta is peach.
Yes.
It goes to my
Coke.
It goes to my question of every single street, avenue, boulevard, lane is Peachtree. Peachtree Avenue, Peachtree Boulevard, and it's northeast,
true.
it's southeast.
I stayed at a hotel on
exactly.
Peachtree Drive.
Exactly. So the days before Google Maps, half the time when I was going to meetings, the taxi guy would drop me off at the wrong
Peachtree.
Oh, you said Peachtree Avenue southeast. I thought it was northeast. I'm like, really? There's the same thing? So anyway, there you go. Got the peach drop. You gonna go to the ball drop here?
No.
Take this subway in from
it's
Brooklyn.
Going to rain, right? I mean, I think it's going to be a mess. But,
yeah, it's going to be a mess.
No, I've never done it, nor do I have any desire to do it. But I'll stay up late. I'll watch it unfold.
I'll be in bed by 9:30.
Okay.
But I did the ball drop 1986.
You did?
My first year in the city. We kind of meandered down. It was about like 45th Street. It's
back
close
when you
enough,
could do
46th Street. Yeah. And I'm not sure you can do that anymore.
No.
I think it's all
Was it
highly
memorable?
regulated.
Was it worth it?
It was like, done it, seen it, bucket list, check it off, and I don't need to do it again. It was kind of one of those things.
I will live vicariously through you having done it.
You go back in the day when we worked Christmas Eve, New Year's Eve till like 8 o'clock.
So you were up anyways.
Our deal team, we were doing an IPO. We went to dinner. I can't think of the steakhouse right across the street from Pain, whatever. And then we literally just kind of like wandered down.
Figured you should do it.
Yeah, 52nd Street down to 45th Street, and we saw it. So there you go. But it'll be like Lisa's telling me like 1 million people or some craziness. So
no, thank you.
I'm going to walk to Penn Station today to try to get home today. I'll try to avoid Times Square. Looking at the futures market here, we got some green on the screen. How about that? They end up the year after a couple of days of kind of 1% declines. We got the S&P 500 up 21 points. That's 0.4%. We're going to have more coming up. This is Bloomberg. Good morning.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We've got futures advancing, setting stocks on course to snap 3 days of losses. We'll start with NASDAQ futures up 0.4%, 96 points. Dow futures up 0.2%, 117 points. S&P futures up 0.3%, or 21 points. The 2-year yield at 4.24%. That's little change. And the yield on the 10-year, 4.53%. And that is little changed. To commodities, gold set for one of its biggest annual gains this century after advancing 26%. We have Brent crude $74 a barrel, WTI crude at $71 a barrel, and we have oil. Gold, is $2,610 an ounce. I jumped the gun. Let's get to oil. Brent crude $74 a barrel, WTI crude $71 a barrel. Over to the Bloomberg Dollar Spot Index. That is little change right now. Shares of Boeing, they're actually rebounding. They're up 0.2%. That's after slipping 2.3% yesterday. You remember that plane that crashed on Sunday in South Korea was a Boeing 737-800. Then you have U.S. listed shares of Chinese companies edging higher. President Xi Jinping said China hit its target of 5% economic growth for 2024. So you have JD.com up about 1.5%, Alibaba up 0.5%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That is a Bloomberg Business Flash. Paul and David.
All right, Lisa Mateo, thank you so much. We appreciate that. David Gura, he's sitting in for Tom Keene. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube as well. David, I got a big problem with our next guest. I mean, Veronica Clark, U.S. economist at Citi. She's great. We love her. Challenging undergraduate.
Yes, well, I remember last she was here, we were discussing the prospects of a Bill Belichick hire at UNC, and lo, it happened.
Exactly.
Hours later.
Hours later, she knew something. Veronica Clark joins us here, the pride of the University of North Carolina, Chapel Hill. Veronica, what's the theme you guys are going out with to your clients for 2025 from an economics perspective?
Yeah. Thanks for having me. Happy New Year. I think our theme is that, we are still relatively out of consensus, maybe very out of consensus. I think the Fed and the markets are maybe a bit complacent here on the weakness that we're seeing in the labor market. I think it's been a couple months of data and people have been convinced that this is a healthy labor market that's stabilizing, and we really don't see that. So I do think that this is setting up for a more dovish Fed than expected next year.
I'd love for you to talk about what I think you characterize as a logical inconsistency in what we've heard from the Fed chair in his recent comments. This assertion that policy rates are restrictive, but it's still appropriate to keep them at current levels over most of next year. Expound upon that, if you would, just sort of what he's saying that's sort of flummoxing, I think, a lot of people who are paying close attention to what the Fed chair in particular is saying.
Yeah, it really goes back to that complacency on the labor market data. Chair Powell is not really expecting to see much further weakness in the labor market. If we go back to the forecast from a couple weeks ago, the median unemployment rate forecast for the end of next year is at 4.3%. That's essentially where we are now. So they're not expecting to see any more weakness in the labor market, but yet rates are still restrictive. Why wouldn't we see that further weakening in labor demand, especially if it is intended, of course, to soften demand and bring inflation down? So I do think that's really the inconsistency. And ultimately, we do think that the labor market picture will win out, and this will be a more dovish Fed.
How do you think about the consumer here, Veronica, in 2025? I kind of feel like the consumer, by and large, has a job. Wages are, by and large, going higher, maybe higher than even the rate of inflation. How do you view the consumer here today?
Yeah, by a number of metrics, consumption has been just incredibly strong. That really is the engine of growth over the last year. I think that's maybe especially true even into the end of the year. We have seen some slowing in business investment. But I do think, if this is a weakening labor market, there are reasons to think that consumption can slow down. The savings rate is still very low and falling. It's below pre-pandemic levels. Consumer delinquencies for credit cards, auto loans, they're well above 2019 levels. So I do think there would be reasons to pull back if the labor market just continues to weaken. Maybe it's really those higher income consumers who are feeling a wealth effect from equities and home prices going up that are really supporting growth here.
We were talking to Michael Purves just a few minutes ago about political risk and what we're going to have to wait and see happens in 2025 when it comes to tariffs policy or immigration policy, what kind of bombast from the campaign trail may come to pass in terms of policy. Curious sort of what you're thinking in terms of when we're going to be able to get kind of sure signs of what's likely to happen here. And we've just lived through this moment where Government funding was once again in doubt. We saw this letter from Treasury Secretary Janet Yellen about government running out of funding here in a matter of weeks. Just dovetail that, if you would, with kind of the uncertainty we're facing more broadly when it comes to policy in 2025.
Yeah, we really don't have much insight into, what is feasible in terms of policy. Of course, we know the, campaign proposals and things like that, but what will actually come to fruition is still very uncertain. Ideally, we learn more, I think, in the early days of, a new government, late January, February. Maybe we can get some kind of, large reconciliation bill going through Congress and signed into law maybe March or April. Assuming that we would see something in terms of tariffs, maybe additional tax cuts, of course, extending the tax cuts that are expiring at the end of this year. But we really don't know a whole lot of specifics yet.
Veronica, what's the Citi 2025 GDP forecast, and kind of what are the puts and takes here? What are the kind of the key things that might impact that number?
Yeah, we certainly are on the more pessimistic end of the spectrum. We're expecting something around 1% growth for the year. Of course, that's much softer than we've experienced, but I do think we've had, a couple year period here where we have been running above potential growth, probably because we've had so much fiscal support, post-pandemic and infrastructure, Inflation Reduction Act, and a lot of that fiscal support is fading. And like Chair Powell was saying, rates are still restrictive, so we should have some kind of slowdown. It is just maybe taking longer to happen than a traditional cycle, but we are already seeing that in sectors like housing, manufacturing, small businesses. And I do think the labor market, the rise in the unemployment rate is telling us the same thing.
We've got to get through the ball drop. We've got to get through inauguration. Then it's January 29th. All the while, we will get more economic data. What are you going to be paying the closest attention to, and what do you think is going to be most determinative in terms of what the Fed does at that meeting and the one that follows?
Yeah, I think the single most important number maybe is the unemployment rate, which is going to come out next Friday on the 10th. Luckily, we don't have a government shutdown, so we will be getting that data. I think that is probably the best summary statistic of what's happening in the labor market. Of course, we have seen it rising. You have to look at it on an unrounded basis now. It's essentially back to the highs that we were at before the Fed cut 50. And that's happened with the decline in the labor force participation rate. So if we do see some rebound there, I do think this could be, a surprisingly high unemployment rate for the Fed going into that January meeting. They very well may be cutting again at that meeting.
But by and large, I mean, don't we call this environment, this labor market, aren't we fully employed more or less?
Yeah, the level of the unemployment rate is pretty healthy, but it's really the trend that's concerning. We've really never seen the unemployment rate rise this much without a recession. I mean, I think the dynamics are that, everyone understands that hiring is very low. There aren't big layoffs yet. But is this hiring that's weak because we were coming off of a really tight labor market, or is it hiring that's weak because businesses are trying to cut labor costs because borrowing costs are high? That's typically what happens when rates are restrictive. And if that's the case, that really isn't changing. And you might just be getting to that last stage, which is layoffs. So.
All right, Veronica, thank you so much for joining us.
Happy
Veronica
New Year.
Clark. Yep, absolutely. U.S. economist with Citi. Again, a little bit more of a conservative outlook, I think, on the economy relative
out of
to
consensus.
Yes, out of consensus. I'm just kind of looking at some of their data here, and I think a little bit below the street in terms of growth and so on. But I wonder how the Fed views that. If 4.2, 4.3, 4.1 unemployment rate, I mean, as far back as I can remember, that is fully employed.
Yes.
I mean, I don't know. I mean,
sort of getting that message from Fed Chair Powell, and they're still exuding a good deal of confidence there, despite the fact that we had that dissent at the last meeting, and certainly that dismal market reaction to that decidedly hawkish Fed when they gathered last time. So just will be fascinating to see as we push ahead to, again, the end of January, sort of what we hear from Chair Powell and his colleagues, other policymakers at the Fed.
How I look at the health of the labor market is the Sweeney offspring.
Yes.
Are they employed?
Fully
yes,
employed?
They're fully
there you
employed.
Go, 100%.
Thank you. So I feel like the
labor
labor markets are good. They're off the dole. It's all good here. Looking at the futures here, a little bit of a lift. Again, we've had a couple of days of kind of 1% sell-offs or drawdowns, as the kids would say, in this marketplace. But the S&P today up about 0.4% of 1%. The NASDAQ up about 0.4%. 10-year Treasury yields looking at 4.52%, pretty steady on your 10-year Treasury. WTI crude oil higher a little bit here, $71.60. This is Bloomberg. Good morning.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
Bloomberg Interactive Broker Studio. I'm Lisa Mateo. Well, we've got green on the screen, and this is following declines of more than 1% for both the S&P 500 and the NASDAQ 100 in Monday trading. So let's get to NASDAQ futures up 0.4%, 96 points. Dow futures up 0.2%, 127 points. S&P futures up 0.3%, or 22 points. The two-year yield at 4.24%. That's little changed, and the yield on the 10-year 4.52%, and that is little change. The Bloomberg Dollar Spot Index, that's up about 0.1%. On the economic calendar for today, yes, we do have data out. It's a report on home prices, 9 a.m. Wall Street time. Markets are closed for New Year's Day tomorrow. Then the data resumes Thursday. Construction spending, initial jobless claims, manufacturing PMI, followed by ISM manufacturing on Friday. Few stocks on the move this morning. Sangamo Therapeutics, its shares tanking down about 51%. This is after Pfizer ended its collaboration and license agreement with the company. They wanted to develop a new gene therapy for hemophilia A. And then biopharmaceutical company Veristem up 36%. The company said the FDA accepted to review its new drug application for the treatment of ovarian cancer. That is your Bloomberg Business Flash. Paul and David.
All right, Lisa Mateo, thank you so much. We appreciate that. David Gura, he's sitting in for Tom Keene. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube as well. So head over to youtube.com, search Bloomberg Podcast. All right, if you follow the Tesla story, you know that Elon Musk is trying to get his investors to kind of focus less on the bending of steel for the cars, more on like robo-taxis, artificial intelligence, all that type of thing. How about the robo-trucks? Is that a thing? I don't hear too much about it, but our next guest is all over that. David Liu, he's a co-founder and CEO of Plus. David, thanks so much for joining us here. Can you talk to us about the autonomous truck? Where are we in the development of this part of the automobile fleet?
David, Paul, thank you for having me here. So in terms of industry development, we've been working on powering autonomous trucks and enabling that for the past decade. And we're on the cusp of actually commercializing autonomous truck in actual operations in the United States as well as in Europe. We're starting to see some of the driverless vehicles running in many of our cities, but having these trucks running on the highways and transporting goods will be happening in the next few years.
You know, we've seen in cities like San Francisco, Waymo with driverless taxis basically on the streets. What does the piloting process look like for driverless trucks? Are we going to see them in certain cities, in certain parts of the country? So what's that rollout going to be like?
Yeah, so Plus has been working on this for the past 8 years. We've started the company in 2016 to enable autonomous trucks on the roads. Today, we're conducting testing and pilot testing in Texas, here in the United States, as well as in Sweden in Europe.
Who are some of your partners here as you look to develop this? Somebody's got to actually make the truck.
Yeah, so this year, 2024, has been a banner year for Plus. We've announced a few partnerships, global partnership with 3 of the global truck manufacturers. One is Volkswagen's Traton Group. They are one of the largest truck manufacturers in the world, including the Scania brand, the MAN brand in Germany, as well as international brand in the US. We also announced a partnership with Hyundai's Commercial Group, as well as Iveco. These are 3 of the largest global truck OEMs in the world. And we know there are about 5 to 6 large truck OEMs that are powering all of the trucks on the roads here today in the US as well as in Europe. And we have 3 of the top global manufacturers that are having us being the technology provider for them.
David, speak to the skeptics in the audience who wonder why we need to have autonomous trucks, why there's a need for these to be on the road. Just explain sort of what benefits they offer and sort of how it stands to sort of reshape transportation logistics in the United States and in Europe as well.
Yeah, so transportation is one of the most important and largest industry in the US. 70% of the goods we use and consume every day are transported by trucks. And we also have a pretty severe driver shortage for the industry. By ATS statistics, we have about 80,000 driver shortage in the U.S. So to be able to supply that much transportation capacity as well as making trucking a safer occupation, automation is the technology to make that happen. And we've been working on this for the past decade, and the industry has actually been working on this for the past few decades. And we're finally getting the technology ready to actually be able to help the industry to provide safer and more efficient transportation.
David, what powers these autonomous trucks? Internal combustion engines, electric vehicle? What's the powertrain here?
Yeah, so we support both the traditional ICE internal combustion engine vehicles as well as the new EV vehicles, EV trucks. In terms of the trucks that we can help make them autonomous, we're actually powertrain agnostic. Majority of the trucks running on the roads today are ICE powered, but we're start to see a slow transition moving over to electric trucks over time.
I wonder if you could just talk a bit about the computing power that's required here. You've been at this for a while, and maybe you could just talk about some of the challenges that you faced and sort of where we are in the evolution of this technology, sort of what the first big hurdle was and sort of how close we are, you think, to this being something that's very normal, very regular for those of us on the roads.
Yeah, so we have seen a tremendous improvement on computing power over the past few decades, past 20 years. When I studied engineering, when I was in school, this was a dream, right? But the computing power wasn't there to be able to do all the processing that's required for the AI technology to be actually being used. We can run some of these algorithms in data centers, but not on trucks. But over the last 10 years, especially with the improvement on computing power, we're seeing this new AI revolution that's happening. And the computing power that can reside in vehicles today can rival that of a large computer server just 10 years ago. So we're able to run these very sophisticated AI models in the vehicle to be able to process all the information, all the data stream that are coming in from cameras, radars, lidars, and that's the reason we're able to run these vehicles safer than an average human driver.
David, in terms of developing and deploying this autonomous driving technology, do you expect any change, either better or worse, from this new administration coming in January?
Yeah, so right now, many of the states or most of the states are very supportive running autonomous driving operations, including Texas, and most of the Sunbelt states are very supportive of that. But we do hope that the incoming administration will be providing even more of a regulation kind of support to be able to provide the federal level regulation support. That would be very helpful to actually accelerate the development of autonomous trucks on the roads.
We're talking with David Liu, the CEO and co-founder of Plus. And David, I'm curious, when we talk about regulation here, who are the regulators with whom you're interfacing? I imagine that there are many, so maybe just not transportation, but other government agencies as well. Who are the principal regulators? And I'm curious, as you've been through this evolution, this build, sort of how much they're talking to one another, how much they have kind of a holistic grasp on the way your technology works.
Yeah, so we interact with both the federal level administrators as well as state level. So both the Department of Transportation as well as some of the other agencies, including FMCSA, that are the regulators for our industry. And we work with both of them on different levels. And with the new administration, we're hoping that on the federal level, we'll have a consistent regulatory support for this type of new technology.
David, I'm thinking of some of the big trucking companies. I'll just say like Amazon, because I see the Amazon trucks everywhere now. They're all over every city, USA. What do the Amazons of the world say about something like this?
Amazon is actually one of our customer and partners that we've been working with them for over the last few years. And they're very supportive and very visionary in terms of looking at utilizing technology to help make the road safer and more efficient. Today, we're helping them to convert many of their existing trucks to be equipped with technology to be driving safer and make it easier for drivers to operate in. And in the future, as I see, in the coming years, we hopefully will be able to provide them more transportation capacity, some of them with automated trucks.
David, thanks so much for joining us. David Liu, co-founder and CEO of Plus, doing on the autonomous trucks. And having worked in the covering the transportation industry on Wall Street, covering a lot of the trucking companies, it's for as long as I've been covering them, for 40 years, they've always had a driver shortage.
Interesting. I mean, that's not a new phenomenon.
The turnover is almost 100% every single year. It's a tough life.
Yeah.
And it's really a challenge for the industry, particularly when the economy is good and jobs are plentiful. Then it's tough to get the truckers out there. So maybe this is a solution. They've been talking about it for a long time. With our news in New York City, here's Michael Barr.
Thank you very much, Paul, David, Lisa. Let's get the celebration started. 2025 has arrived in parts of New Zealand already. Here in the U.S., tight security is planned for New Year's celebrations. With 1 million people ready to ring in 2025 in Times Square, the New York Police Department is positioning to keep them safe. Police are mindful of the Christmas market attack in Germany. NYPD Commissioner Jessica Tisch.
At this time, there are no specific credible threats to the Times Square New Year's Eve celebration. However, we have been operating in a heightened threat environment since October 7th, and we remain vigilant.
Commissioner Tisch says that includes thousands of officers, bomb-sniffing dogs, and drones in Times Square. The Biden administration is blaming China for a major security breach targeting the U.S. Treasury Department. The department says it learned earlier this month the hackers gained access to employee workstations and unclassified documents. January 9th will be a national day of mourning for late U.S. President Jimmy Carter. Carter died on Sunday at age 100. An 8-day period of mourning begins tomorrow, which includes a state funeral in Georgia. President Carter's remains will lie in repose at the Carter Presidential Center. Karen Ryan of the Carter Center worked with the former president and Rosalind Carter for more than 30 years as their senior advisor.
President Carter would say that he wanted to be remembered for never going to war, never dropping a bomb, and for standing up for human rights.
Carter's remains will then be flown to D.C. to lie in state at the U.S. Capitol and end with a national memorial service in Washington. President-elect Donald Trump is throwing his support behind House Speaker Mike Johnson in his fight to keep the gavel. Johnson has been facing pushback from the far right for weeks. Global news 24 hours a day and whenever you want it with the Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Paul, David, Lisa.
Michael Barr, thank you so much. We appreciate it. All right, we got the S&P 500 up 25%. You know who benefits? The people who own a lot of stock. The world's 500 richest people reached a combined net worth of $10 trillion in 2024, led by Elon Musk, Mark Zuckerberg, and Jensen Huang. The tech industry played a significant role in the wealth increase, with the 8 tech titans gaining over $600 billion, or 43% of the total increase. The billionaire's wealth was boosted by a strong stock market, with the S&P index gaining 24% through Monday. How about that?
The photo complimenting this on the terminal, one of Elon Musk and President-elect Trump next to one another. So one has to think that they're playing their cards. They're playing their cards right. This is likely to continue here into 2025
with
a T.
Yes,
trillion. So I mean, folks, with the terminal in front of you, RICH Go, Rich Go. One of our more fun functions. It just shows you kind of the wealthy. It's probably the best, most accurate calculation of personal wealth for some of the richest people out there in the marketplace. Rich Go. And what I like to do is kind of see like who had a good year, and you can see change year to date. Elon Musk up $213 billion.
With a B.
Yep. So good for him. The rich get richer. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We've got futures pointing to a positive end to the year in Wall Street on this last trading day of 2024. We have NASDAQ futures up 0.4%, 84 points. Dow futures up 0.2%, 111 points. S&P futures up 0.3%, or 20 points. The two-year yield, 4.23%. That's down 1 basis point. The yield on the 10-year, 4.52%, and that is little change. To commodities, we have Brent crude at $74 a barrel, WTI crude $71 a barrel, and spot gold $2,611 an ounce. The Bloomberg Dollar Spot Index right now is little changed. Few people making news. Soccer star Lionel Messi. He carried out an IPO of his real estate properties, valuing the portfolio at just over $232 million. Now, the company's been listed as a REIT. It owns 7 hotels, commercial real estate, and houses. It did, though, post losses in 2022 and 2023. And here's a new work trend. Business Insider is saying burnt out workers, well, they're opting for something called a micro-retirement. Similar to a sabbatical, you take a big break from your career, like a couple months, even years, but it's becoming more popular with the younger generation who are not even actually close to retirement age. That is your Bloomberg Business Flash. Paul and David.
The Sweeney offspring better not bring that to me at all. That's not going to happen. Lisa Mateo, thank you. We appreciate that. David Gura sitting in for Tom Keene. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Brokers and studio. And we're streaming live on YouTube as well. David, you walk right outside the Bloomberg headquarters, Lexington Avenue, 59th Street, Lexington Avenue. You look at right across the street from Bloomingdale's, and they got these big cameras spanning the street. That congestion pricing thing, that's coming.
Yes, I think that there's a legal challenge, but we did see the governor kind of reverse course, say she wants to implement with a lesser amount. But there are a lot of unanswered questions about it. Chief among it, sort of, will it be allowed to happen here? But we have a better sense now, at least, of what the price would be.
Yeah. So again, Bloomberg News reporting that there's some federal challenges. There's some challenges from the great state of New Jersey. What is it going to mean for them? More traffic. I don't know how that all works. They've had it in London for a long time.
Yes.
You know, people I talk to, they kind of like it. I mean, because maybe I talk to people that are more cyclists, so they like the fact that they're not getting
a little less crazy.
Run over. So we'll see how that plays out. But for us folks here on this little island of New York, this is a big deal for us.
Now, a look at the front pages. What's making news around the world? Your daily roundup of today's headlines from major publications.
All right, very good. Lisa Mateo joins us here in our studio with a look at some of the stories in the newspapers. What are you looking at today, Lisa? All
right, we've been talking about New Year's Eve, right? This is when the ball drops. We've already seen it in a couple of areas around the world. But fireworks might not be the only thing lighting up the sky. NOAA is saying that this geomagnetic storm could make the northern lights visible across the northern part of the country today. So you could get a double bonus. And then the storm could also make the lights visible again after sundown on New Year's Day. Where are we talking about? So Vermont, New Hampshire, Maine, not here in New York, but also Washington, Idaho, Montana, North Dakota, South Dakota, Minnesota, Wisconsin, Michigan. But it's still up in the air. A lot of technical things to consider.
Don't you generally have to be like in, I don't know, Scotland or Norway or Finland and places like that to see the northern lights?
No, well, this is the third time we've seen them here. In May, also in October. Wow. So we've seen them around.
My brother-in-law saw them in Maine a few months back, and he said it was wild. It's just very disorienting and an incredibly beautiful sight. But yeah, I think my sense was always you had to go to Scandinavia or something.
Correct. But if one's in bed by 9:30 at the latest, is that a problem?
Yeah, you can't. Well, maybe New Year's Day. There's another shot New Year's Day on sundown. So if you're up for that,
I'll be up for that. All right, because some of us are working Thursday and Friday. What else you got?
Yes. Okay. Investors actually pulled a record amount of actively managed stock funds this year. There was a shift in cheaper index trading investments. So you probably know more about this than I, but this is from data from EPFR. Outflows from stock picking mutual funds reach a record amount, $450 billion. Now, when you compare that to last year's previous high, it was $413 billion. So they're saying that passive investing ETFs starting to affect the market for active mutual funds. So what's the problem? They say that traditional stock picking funds, actually they have relatively high fees. And so that's like the issue with it. And then their performance lags behind the Wall Street indices that have like the big tech stocks. That's all the talk now. now. So older investors who like them, they're starting to cash out. And then you have the younger savers who are turning to the cheaper passive strategies like an index ETF. So that's exactly
I mean,
what's
it's been one of the most amazing phenomena in my 40 years on Wall Street has been the growth of ETFs.
Yes.
And it is I grew up, my number one client was Fidelity. My number two client was T. Rowe Price. My number three client was Capital Funds. I mean, these big mutual fund complexes, because that's where all the money was.
Yeah.
But now these ETF wrappers, as Eric Balchunas
Yes,
from Bloomberg
you've
Intelligence
got the lingo down.
has been telling us for 10 years, 15 years, it's just a much better wrapper to manage these funds.
And you're right, it's a decades-long phenomenon, but this last year in particular seems to have seen such incredible growth.
If I'm the folks at Fidelity or T. Rowe Price, I don't know what I do, because I think the funds they're just leaving. Now, as Eric Balchunas points out, they're doing okay because the value of their assets have remained relatively high because the stock market's been going up, 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 up. So even though you've had withdrawals out of the mutual funds, the total assets under management is still great.
Interesting.
So they're still making money. But
and it's funny you point that because the Financial Times article says, look at BlackRock. You know, they offer ETFs and things like that. And
great. I think it's great for investors. Lowers the cost, it makes it more transparent, and so we'll see.
All right. You've heard about, Party City, Big Lots filing for bankruptcy, right?
Yes.
So now the former CEO of Modell's, Mitch Modell, says he wants to buy them. Okay. So actually, Modell's filed for bankruptcy 4 years ago.
I was going to say, I don't see many Modells around the city anymore.
No.
That was a pandemic, I think, casualty.
Yes, correct. We had him in Jersey too, gone. But he does tell the New York Post he wants to raise $1 billion to kind of give them this financial lifeline. He wants to put his sons, Matthew and Maxwell, in charge as co-presidents. They're actually 23 and 22 years old. He's already lined up some executives, and he wants to save jobs. That's what he's saying, because combined they have about 33,000 workers. So that's why he wants to do that. He wants to get rid of the bulky furniture and Big Lots that they're known for. Party City, he actually wants them to sell footwear and sports gear in addition to the party stuff. So this is what he was saying, but I don't know if it's too late, because we were talking about, the deal that Big Lots struck with Gordon Brothers. That could be at risk now too. So who knows where this can go, but he says he's up for it.
I'll pause to say, as a dad with young kids, it really is terrible that in the city now there's no place to get sporting goods. So like if you have to get cleats.
Right, what do you do?
Oh, they don't have
online, just gotta go
Dick's
online, but it's like
Goods or anything?
No Dick's Sporting Goods in the city that I know of. But it's a real, with Modell's gone, there's no place to go for basics like that.
That's a good point. I mean, and so you buy it online and you hope it fits.
Right, and you exchange it.
And then you have to
or they just have to squeeze into those shoes.
And then your kid's crying and forget it's the end of it.
Gotta go to Moe's. All right.
I love that theme. All right, so this is the last one. This stood out to me because if you can't afford the $10,000 or Hermes Birkin bag, Walmart has an option for you, okay? It's a dupe. It's less than $100. It's $78. Everybody's talking about it all over social media. It's called the Walmart Birkins, or some people call it Workins or Walmays. And it looks, if you look at the pictures, it actually looks a lot like it. But the problem is that they're selling out on Walmart's website because that's where people are buying them. But I didn't even realize that Walmart actually sells real pre-owned Birkins.
You can buy used Birkin bags from Walmart.
From Walmart for like 24 grand.
For 24 grand.
What do they list for new?
New, I don't know. Used is 24, and you can get it. You can get a $10,000 Birkin bag.
The challenge is being able to get one, I think. You
But
have to be
it's
like on a list. There's like a waiting list.
Yes, it's a nightmare to try and get one, and you have to like wait on this list, and you have to have like a ridiculous salary in order to get it. But people are questioning like, how legal is this? Like, it looks so much like the bag, you know.
I remember reading the book about Gucci and then seeing the movie. The book was written by a Bloomberg News reporter Sarah Ford, and thank you, Ari. Great book on Gucci. I recommend people take. And then they made it into a movie, really good. The Gucci, obviously, the Gucci bags, you see them on every street in Manhattan.
Yes.
Yeah.
For a while, they didn't care. Because they're like, it's no big deal. People are still going to buy it. They're going to. Then it's
those who know will know.
Yeah, those will know. I don't know, but it's been an issue out there. For those of you who've walked around the streets of New York and seen the people,
you don't even have to go to the Walmart website.
You don't even have to go to the Walmart website. You can just walk out in the corner and buy so anyway. All right, that is our newspapers with Lisa Mateo. Looking at the markets here with futures, still a little bit higher on this New Year's Eve. The S&P 500 is up 15 points. That's about 0.25%. The Nasdaq's up 60 points. That's also better. 0.25%. 10-year Treasury yields pulling just slightly, 4.52%. WTI crude oil, $71 per barrel. I watch Landman. I know all about the energy and gas business, oil and gas business. This is Bloomberg.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
What do you say to people scared stiff in cash?
We've got an administration, presumably, that will be pro-business, lower taxes.
With Lisa Mateo on markets.
AI affecting demand for cloud computing.
And Michael Barr with news.
U.S. Secretary of State discussed the conflict in Gaza.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
All right, coming up in this hour, we're going to check in with Lisa Sturtevant. She's the chief economist at Bright MLS. Discuss the outlook for real estate in 2025 and how the Fed can impact the residential real estate market. Jeff Crumpelman, chief investment strategist and head of equities at Mariner Wealth Advisors, discuss his outlook for 2025 and whether he remains bullish on these markets. Mark Weatherford, he is VP Policy and Standards at Gretel, talks about his recommendations for cybersecurity for the incoming Trump administration. He's got some thoughts there. People say cybersecurity, that is a theme for 2025 across these markets. Right now, let's go to Lisa Mateo and get a Bloomberg business flash.
Yeah, we've got futures pointing to modest gains. This is after yesterday's weak showing on Wall Street. We have NASDAQ futures up 0.2%, 47 points. Dow futures up 0.1%, 73 points. S&P futures up 0.2%, or 13 points. We have the 2-year yield at 4.23%. That's down 1 basis point. The yield on the 10-year 4.52%, and that's down 1 basis point. Keep in mind, bond market closes 2 p.m. Wall Street time today. Meanwhile, markets in Germany, Italy, Switzerland, they're among those closed for New Year's Eve. Shortened sessions in London and Paris, and Japanese markets, they are closed through January 6th. Over to the Bloomberg Dollar Spot Index right now.
Through January 6th?
January 6th, what? That is correct. Yes, they really celebrate that New Year.
Guess.
The Bloomberg Dollar Spot Index up 0.1% is actually on course for its best year since 2015. I have to point out Bitcoin up more than 2% at just over 94,000. And then shares of MicroStrategy, that's a tech company borrowed heavily to invest in Bitcoin. Their shares up 4% after sinking more than 8% yesterday. And Tesla shares also rebounding after a 3-day sell-off. They're up nearly 1%. And then you check in with other members of the Mag 7. You have Amazon at more than 0.5%. Same for NVIDIA, Apple, Alphabet, and Meta. They're all up about 0.2%, and Microsoft up 0.3%. That is your Bloomberg Business Flash. Paul and David.
You know, it's interesting. The U.S. markets, I learned this very early in my career when I was on the New York Stock Exchange in 1987 during the crash. They don't like to be closed more than 3 days. That's kind of them. They want price discovery no more than a 3-day lag.
I remember this well from just the beginning of the pandemic when I was down there at NBC at the time. I went down there day after day after day, and there was that anxiety about, is it going to be closed? How long is it going to be closed? And the effort that management went through to keep it open as long as they could before the true picture of things came into focus.
So for Japan to be closed for the 6th, that's really interesting how they think about markets and how we think about them in terms of liquidity and price discovery and valuation. So interesting story there. David Gura sitting in for Tom Keene. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube as well. So go over to youtube.com, search Bloomberg Podcast, and that's where you will find us. Ross Mayfield joins us here, investment strategist at Baird. Ross, what are you telling your clients? What's your 2025 letter to your clients? What's it saying about positioning for the new year?
Yeah, so if I had to sum up kind of how we're thinking about the new year, it would be number one, don't let, being at all-time highs and having back-to-back 20% plus years scare you out of the market, right? It's not a reason in and of itself to get bearish on things. If you look through history, there's not a lot of examples, but the ones that you can find, pretty good, or at least the median return is still pretty solid. So not to be scared off by all-time highs, that until this recent soft patch, there was quite a bit of momentum and breadth in markets, and earnings are expected to grow. So, we like, or personally, I like large over small, U.S. over international, but by and large, we're saying remain invested. Don't be scared out of the market just because we've had a nice couple of years here.
Is this a story then, Ross, of continuity? Is there any part of you and your planning that says, let's take a pause here, given the gains that we've seen that Paul has described so ably here over the last few minutes? Take a pause. There's so much uncertainty, particularly when it comes to policy and regulation. Maybe take a breath, or is the next chapter fundamentally the same as the one we've been through as you see it?
It's a different chapter, but part of the same story, which is the bull market that started in October 2022. If it were to end tomorrow, it would be historically short and historically weak by the last 100 years of bull markets. There will be different drivers, a new administration, different policy levers. Certainly, we saw post-election different winners than we'd seen for the first half of this bull market. But I think that while you might expect some chop, in the first quarter of next year, right? We have sentiment at highs, valuation stretched. There's a transition that will take place that's often kind of messy or noisy. It's not in and of itself to us a reason to get out of the market or be uninvested. And in fact, I would say that any pullbacks on that sort of, frothy sentiment or policy headlines is very much viable because the fundamental picture remains strong. And even if you need to temper your expectations, for another 20% plus gain, we think it's still very, very good time to be invested. And we're still in the middle innings of a bull market here.
Ross, you mentioned earnings here. If I've got a Fed that's probably only going to be cutting a couple of times in 2025, it just feels like the market really needs earnings to come through. How confident do you feel in what appears to be a double-digit consensus estimate growth for earnings in 25?
Yeah, well, first, I would say I think you're absolutely right. It's tough to see much valuation expansion from here, especially if the Fed goes at kind of a slower and shallower pace. So you do want to see the earnings kind of pick up the slack, and that's typically what you'd see in the middle to later innings of a bull market, right? Early part is all about valuation expansion and animal spirits and people getting back into the market after some crisis. And now you really need to see the fundamentals of the companies back that up. I would say I have confidence that earnings will grow, the typical pattern I'd expect to play out, which is if we're expecting 15% earnings growth today, you probably get some revisions down. But I think high single digits, low double digit earnings growth is more than enough for this market. And again, if we're saying already that, you can't really expect 20% gain year after year after year into perpetuity, maybe that high single digit, low double digit type of gain, even if we don't actually see the average come through all that often, is probably a good place to set your base case. And that's driven primarily by earnings. So enough confidence to get the job done, I would say.
I'm thinking back on the year that was, maybe the last 2 years that were AI, such a huge story. We've seen that kind of buoy a number of these big companies. You mentioned you like big over small. Are you happy with the degree to which this market has broadened out, or is there still more room for that to happen? Are you content with the fact that we still have seen so many of these gains kind of consolidated among these just handful of companies?
It's a right question to ask. I would say a couple of things. One, concentration is not a good indicator of future performance. So if you had used the concentration of the market as a reason to be worried over the last couple of years, you would have, given up gains. Concentration is just, it's not a bad indicator. It's not a good indicator. It's kind of like meh over time. With that said, I mean, it puts a big spotlight on AI to really continue to deliver, because if you have, 30 to 40% concentrated in the top 10 names, and you could say 8 or 9 of those are at this point pretty explicit AI plays, you need investor enthusiasm and the results to continue to deliver. So that does, introduce a risk. The economy doesn't run on AI, but the market for an S&P 500 investor and NASDAQ investor very much does. I think we'll see the market continue to broaden out. Financials and industrials, I think, are two non-tech related corners of the market that have been working over the last couple of months, should continue to work with the backdrop we see into 2025. So broader market, all else equal, is healthier, but it doesn't bother me all that much that we have this concentration in big, healthy, strong companies, competitive globally. It just means that AI has to continue to deliver on the investor enthusiasm and expectations, which are at this point obviously pretty high.
Ross, what are we doing in the fixed income space here? I can sit in a 2-year treasury at 4.22%. Be pretty comfortable there, clipping coupons. Do I need to take credit risk out there in 25?
I don't think so. I mean, I might kind of disagree with the Fed's assessment of things, but they've told us what they plan to do, right? Which is, cut a few times, a slower and shallower rate cut path. Credit spreads are extremely tight here, looking very richly valued. So, most of our clients, and this is just quite frankly what we see, is very comfortable in money markets or short-term treasuries, CDs, taking very little risk and getting still a yield today that they weren't able to get for a decade, prior to the rate hike cycle that we saw in 2022. So I don't think that, there's a lot of need to take too much credit risk. There's spots that we like, but by and large, I think most of our clients are content to sit in something very safe. Look at, a real yield, a positive real yield now that inflation has come down, and just continue to, as you said, clip those coupons.
All right, Ross, thanks so much for joining us. Appreciate that as always. Ross Mayfield, investment strategist at Barrett, who's mentioning the real yield, which Tom Keene loves to call out. We're sitting at 2.24%, the real yield in the 10-year or 15-year treasury. So pretty interesting there. With our news in New York City, here's Michael Barr.
Thank you very much, Paul. David, Lisa, tight security is planned for New Year's celebrations in the U.S. following the deadly Christmas market attack in Germany. This morning, the final preparations are underway nationwide as revelers prepare to ring in 2025. About 1 million people are expected in New York's Times Square to watch the ball drop tonight. Mayor Eric Adams.
There'll be officers in uniform and out of uniform. We're going to make sure we have the omnipresence of the blue uniform, would always bring that level of security, but there are many officers that have plainclothes assignments to give the element of surprise.
However, there are no credible threats here in the U.S. In Atlanta, large crowds are expected for the peach drop returning this year after a hiatus. The official funeral for former President Jimmy Carter will be held on January 9th at the Washington National Cathedral. This Saturday, a motorcade will carry Carter's remains through his hometown of Plains, Georgia. He will then lie in repose at the Carter Presidential Center. On Tuesday, Carter will lie in state at the rotunda of the U.S. Capitol. A South Korean court issued an arrest warrant for embattled President Yoon Suk-yeol, who has been suspended from power over his short-lived martial law declaration. If it is carried out, Yoon would be the first sitting president in South Korea's history to be arrested. Yoon's team has called the warrant illegal and invalid. Have you ever wondered what you're going to do with your Christmas tree now that the big day has come and went? Well, have you thought about feeding it to a goat? Pine trees are a parasite-free, nutritious snack for goats loaded with vitamin A and C that help the animals maintain a healthy digestive tract. This man dropped off his Christmas tree and found a very appreciative group of goats.
The goats were very friendly. They were excited to see us. They came running out of their shelter and hopped up on the fence, wanted pets after they were done getting their fill of the Christmas tree.
The nonprofit Urban Growers Collective in Chicago says feeding Christmas trees to goats is an eco-friendly, sustainable way to help reduce waste. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg.
Paul,
David, Lisa.
You're very excited.
Michael Barr, I've been on this planet 61 years. I have never heard goats eating Christmas trees. Where do you get your news stories?
Have you tasted some of my meals that I've made?
Wow.
No, this is something that it started a couple of years ago.
All right.
Yeah.
I mean,
bring it to the shore.
Yeah, exactly.
Get the goats down there.
I just take it across the street to the the dump.
Mulcher.
We're all good to go.
We dragged it up the street yesterday, Prospect Park, and they'll mulch it for you.
Is that right?
They'll give you a bag of mulch when they're done. Yeah.
Really?
Wow.
Citywide program.
I just take mine and throw it in the backyard, man, because there's a group of trees in the woods out there. So.
No one knows any better.
And no one knows any better, yeah.
I pack mine back up in the box and put it in the attic.
The Mateo household goes fake tree.
As I vacuum the needles, I thought. Lisa's
exactly.
right.
Lisa's right. She's off into something. All right, Michael Barr, thank you so much. Looking at the markets here, we got futures up a little bit here. S&P up about 15 points. That's 0.25%. The NASDAQ up about 58 points, again, about 0.25%. So we're just going to hang on that with some very low volume today, as you expect on New Year's Day. We're open here till 1 p.m. Wall Street time is the equity markets. The bond guys, they're hanging around till around 2 o'clock. This is Bloomberg. Good morning.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We've got futures advancing, setting stocks on course to snap 3 days of losses. NASDAQ futures up 0.3%, 65 points. Dow futures up 0.2%, 101 points. S&P futures up 0.3%, or 17 points. The 2-year yield at 4.23%. That's down 1 basis point. The yield on the 10-year, 4.53%, and that is little change. To commodities, we have oil pushing higher. This is after factory activity expanded for a third month in China. Brent crude $73 a barrel. We have WTI crude $70 a barrel. And gold set for one of its biggest annual gains this century after advancing 26%. We'll check in with spot gold at $2,606 an ounce. The Bloomberg Dollar Spot Index up about 0.1%. We have shares of Boeing. They're on the rebound, up 0.2%. It slipped 2.3% yesterday. If you remember that plane that crashed on Sunday in South Korea, it was a Boeing 737-800. And U.S. listed shares of Chinese companies, those are edging higher. President Xi Jinping said that China hit its target of 5% economic growth for 2024. So you have JD.com up 1.5% and Alibaba up 0.5%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That is a Bloomberg Business Flash. Paul and David.
All right, Lisa Mateo, thank you so much. We appreciate that. David Gura sitting in for Tom Keene here today. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio, and we're streaming live on YouTube as well. Well, the good news in the residential real estate market, at least in my town on the Jersey Shore, house goes up for sale, it sells like 15 minutes later.
Fast.
Unbelievable.
Yeah.
The problem is there's just no inventory. And so if you're a real estate agent, it's a tough living these days. But I think part of the problem is we still got a 30-year mortgage at 6.75%. That's according to the Mortgage Bankers Association. That's really high relative to most people like Alex Steele, who's sitting on 2.75%. She's never leaving Brooklyn, ever. So what do you do in the residential real estate market? Well, maybe our next guest can help us out here. Lisa Sturtevant, Chief Economist at Bright MLS. Lisa, talk to us about the state of the U.S. residential real estate market here. Where are we today?
Yeah, I think you really hit it on the head that with that gap between mortgage rates that current homeowners possess, given what they could get on the market right now, it makes it really hard for homeowners to list their home for sale, giving up that super low mortgage rate. And that's continued to keep inventory really low. I will say, though, I think there is a little bit of light at the end of this tunnel. We're starting to see listing activity increase. We're starting to see some families who may not want to give up that really great mortgage rate are doing so because, frankly, life happens, family changes, financial changes, and we will see more people listing their home in 2025.
What accounts for that? I wonder sort of what history tells us about how people get acclimated to rates being what they're at. I guess it's a bit of consumer psychology here, but what is it that's going to change that trajectory as you see it?
Totally. I'm so glad you brought up psychology, because we talk about the housing market with a lot of economic terms, but buying and selling a home is like an emotional and psychological decision as well. And my favorite word these days is re-anchoring, right? We're re-anchoring our expectations. A couple of years ago, we were expecting rates to be in the threes because that's what we had seen. Now that rates hit 8% a couple of years ago, have been up around 7% for so long. If you see a mortgage rate in the mid sixes, you think that's pretty good. And so with those re-anchored expectations, more buyers and sellers are going to be out there in the market.
What do you expect about mortgage rates here? We've had a Fed, cutting here in 2024, yet the 10-year Treasury, which I know is kind of a benchmark for kind of just fixed mortgages, still kind of sitting here 4.5% kind of thing. Is the expectation in the real estate world that mortgage rates will in fact come down to 25?
Yeah, we've really seen that mortgage rates are reacting more to expectations as opposed to actions by the Fed. So we saw the Fed's revised projections for 2025 showing greater risk of persistent inflation, fewer rate cuts. And so, mortgage rates have actually stayed pretty high here at the end of the year in December. I think the question is where inflation will go. And if we expect inflation to continue to come down, which I think it will, we will see mortgage rates come down in 2025, but they're going to come down a lot slower than we expected. And I also think they're going to remain, we're not going to see rates below 6% in 2025 and maybe not even in 2026.
I wanted to ask just about the part of the country that you pay the closest attention to. So this is kind of the mid-Atlantic, and what trends are you seeing there that we might be able to extrapolate to other parts of the country? Is there something sort of unique about the housing market where you are, or is it something that kind of indicates where the broader U.S. housing market may be headed?
Well, I think, here in the Mid-Atlantic, we have a lot of housing markets. We're a little microcosm of the U.S. But I will say that, the market in our area that is really of interest is the Washington, D.C. market, and what's going to happen when President-elect Trump takes office. Will federal government agencies be moved out of the DMV? Will more federal workers be called back into the office, which we're already seeing in the private sector and other governments? And how will that affect the housing market? So when we look at back to the office and when we look at what might happen with federal agencies, the DC market really is on the precipice of maybe really having a very uncertain housing market here in the year to come.
Florida. I like South Florida as much as the next person. South Beach digs me. But how many more people can we send to South Florida? It's going to fall off the map here. Talk to us about that market.
Yeah, it's funny to say that. A lot of people are attracted to Florida during the pandemic. We see a lot of retiree movement, but also other folks moving down to Florida. We started to see that migration down to Florida slow a little bit. A couple hurricanes in a row will do that to you, but also the fact that homeowners insurance is becoming more expensive in Florida in particular. Florida actually has some of the markets where we're expecting to see very soft price growth, maybe even price declines in 2025 as that demand dries up and more inventory starts coming on the market.
Adding to this uncertainty, I suppose, is the rhetoric we've heard about new tariffs being put in place, and that could, I'm sure, weigh on home builders who are going to have trouble getting timber if they go into effect, other materials. How are you thinking about that? I think with each of our guests this morning, we've been talking about kind of policy uncertainty, political risk in the year ahead. How much is that, just uncertainty around tariffs and trade policy, weighing on the housing market as a whole?
Yeah, I think uncertainty is really the name of the game. And for home builders, tariffs, of course, are going to be front of mind when talking about getting materials. But I'll also say labor, right? There's also policies out there related to immigration that could have a really disparate impact on the construction sector. Labor's already really hard to come by in the home building sector, which is one reason why we don't build as many homes as we need. And with that sort of double whammy of tariffs and immigration policy hitting the home building sector, we could see that the home building activity that we really need in order to increase supply could be, much more sluggish than we would have hoped.
Lisa, we hear about a housing shortage in the United States. Do you agree that there is one, and kind of how do you guys think about it?
Right. So I get asked that question a lot. How can we have a housing shortage? We have seen in 2024 that homelessness ticked up. However, that's not really what we're talking about when we talk about the housing shortage. I think about the housing shortage as if we had enough housing, let's say on the for sale side, then we would see home prices rising at about the same rates as incomes, right? You would see that sort of parallel increase. But we've been seeing home prices rising much more quickly as demand has outstripped supply. So there's a structural shortage of housing that has been in the market for a couple of decades. It's going to take some time to work that out. Demographics is going to fix some of the structural shortage as we move into the next decade and the baby boomers move out of certain housing stock. But it is this idea of how much housing would we need so that a first-time home buyer could get into the market in the same way they could a generation ago.
Lisa, thanks so much for joining us. Really appreciate it. Lisa Sturdivant, she is the chief economist at Bright MLS. And what I hear about is affordability. The affordability has been, at some of the lowest levels ever, in the sense that housing prices are higher, yet mortgage rates are higher. And so just the ability for people to afford buying a home is so much more difficult than it's been in a very long time. I guess maybe you factor in on top of that, maybe some of the young folks have educational debt that maybe we didn't have. So just that home affordability issue is kind of what I hear
and
about.
And it's the story with rent as well. I mean, here in New York, at least, that's still a huge issue. Just the amount of money folks are paying, young people in particular, for places here in the city.
Yep. Yet they still come.
They're still here. Yeah.
There's no availability for apartments here. People are just kind of coming in it. We had a little blip during the pandemic, but right back as we always knew it would. You can't keep a good city down. We've proven that time and time again here. S&P futures here about an hour and 5 minutes before the open. We're up about 0.2% on a light trading day. This is Bloomberg Morning.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We've got green on the screen this morning, and that's a nice change of pace following declines of more than 1% for both the S&P 500 and the NASDAQ 100 yesterday. We'll start with NASDAQ futures up 0.2%, 57 points. Dow futures up 0.2%, 86 points. S&P futures up 0.2% or 15 points. The 2-year yield at 4.22%, down 1 basis point. The yield on the 10-year, 4.52%, and that's down 1 basis point. The Bloomberg Dollar Spot Index up about 0.1%. On the economic calendar for today, report on home prices. That's in about a half hour from now. Markets close for New Year's Day tomorrow. Then the data picks up on Thursday. We have construction spending, initial jobless claims, and manufacturing PMI. And that's all followed by ISM manufacturing on Friday. few stocks on the move this morning. Sangamo Therapeutics, its shares tanking down 54%. This is after Pfizer ended its collaboration license agreement with the company to develop a new gene therapy for hemophilia A. Then you have biopharmaceutical company Veristem up 32%. The company said the FDA had accepted to review its new drug application for the treatment of ovarian cancer. That is your Bloomberg Business Flash. Paul and David.
Hi, Lisa Mateo. Thank you so much. We appreciate that. David Gura sitting in for Tom Keene. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Jeff Krumpelman joins us. He's the Chief Investment Strategist and Head of Equities for Mariner Wealth Advisors. All right, Jeff, what do I do in 2025? You did well for me in 23. 24, you did okay. What do we do here in 2025?
So, kind of our slogan or motto is hold your ground. And what we mean by that is not just, sit there, but if you have enjoyed, 2 consecutive years of 20% plus gains and your normal long-term strategic target is 60% for equities, you've got a 60%, 40% kind of portfolio, that's taken you well above that. Please trim back to normal would be, point number one. Stay there. We don't see a meltdown of any sort, even after these strong gains. But we're more middle of the pack this year as opposed to being quite bullish in 23 and 24. More average historical gains, but the other idea that, I've kind of brought up is we're going to see some clear air turbulence in 2025. More volatility. And I think you want to strap in a little bit. It's not going to be a smooth ride to 6,600, which is our base case target.
Talk a bit more about, as you hold your ground, how you're going to be looking for signs of what's to come, particularly on the policy side of things. When do you think we're going to get some clarity on that, and how determinative do you think that's going to be in terms of what this market's going to do in 2025?
Yeah, and I like the way you kind of phrase the question because, the Walt Whitman said, be curious, not judgmental. It's premature to be positioning for the uncertainty in policy and what may kind of occur. And I do think that, folks are speculating as to whether or not tariffs are going to be employed broadly as a negotiating tactic, what have you. I think that we take our cues not from speculation about what that policy may be. We'll be watching it, but the impact will be expressed in things like trend in inflation, trend in earnings, trend in interest rates. And that's going to be what we are monitoring throughout, how the data, the metrics, trend through the year. And those policy initiatives, if they do occur, when they occur, will be expressed in those items. So that's how we're kind of monitoring the situation.
Jeff, you had to be really exposed to technology in 23 and 24, I would argue, since the great financial crisis. But that's been the leader. Do you expect technology to be the leader in this market in 2025?
Well, when we look at the earnings growth expectations for all sectors, the nice thing about 2025 is they're positive across the board. They're most positive in technology, consumer discretionary. Healthcare is a kind of a contrarian sector. We're looking for 20% earnings growth in that area, financials, industrial. So we've got some broad strength in terms of earnings contributions next year. Sure, technology will continue to be part of that. And we have healthy exposure there. We're equal to slightly overweight the sector. I think we're more selective in the position size and what we own in that group than we have been in prior years, where the mega cap stocks just continued to soar. So we'll be a little more selective in technology, but certainly AI, cloud data center, and the need for labor productivity software solutions, that ain't going away. So yeah, we want to be there.
I'm going to jump in here. I know Paul would ask the question if I didn't, and that's about valuation and how concerned you are about where valuations are and where that fits in on your screen of risks here for 2025.
Yeah, it is a concern, and that's why we're more middle of the pack this year, not so, ultra bullish as we were in 23 when many were bearish. I think you have to look at valuation a couple ways. We look, when we assess the market, we look at fundamentals, valuation, and technical price trends. Fundamentals are blue sky. That's the blue sky part of moving through that turbulence. Valuation at 22 times earnings is full. That said, valuation can stay high, for quite some time if fundamentals continue to be strong. And what we like as active stocks selectors is that you've got the 22 influenced by a handful of stocks, call it 7, that are priced at 30-ish. And if you look at the equal weight S&P 500, that's trading more like 17, 18 times. Return on equities come up over the last 20 years significantly as companies have become more efficient and we've moved more towards innovation and technology. So there's a reason why PEs have drifted up, but it is a concern in that there's no real cushion should those fundamentals fail. That's where we're going to see those snapbacks. We get any data points or earnings news that is less than perfect, you're going to get that volatility in there. We do think the fundamentals will come through at the end of the day that will get us to that 6,600, but get ready for some bumps along the way.
Jeff, did anything change for you and your team thinking about the equity outlook for the next 12 months, the day after the election last month?
I think it does bring some uncertainty into the equation, but you have this kind of tug of war. Is this going to accelerate growth? Some of the initiatives going through, the tax cuts, certainly can do that for, some time. And that's a bullish thing. But then you have thoughts of, okay, if you have aggressive deportation strategies that are implemented coupled with tariffs, that could be inflationary. And at the end of the day, if that does reaccelerate inflation, that could be recessionary. So I think that's where, all the rhetoric, you don't know what's going to happen, exactly when it's going to happen. That's why we stay focused on the fundamentals, the valuation, and the technicals. It's the uncertainty probably that rose. And then after 2 consecutive years of great strength, you better be cautious when valuation is at 22 times and the market technically is telling you it's tired. It looks tired as we close out this year. So we're a little more cautious.
I want to go back 8 years ago and kind of contrast your approach to this second Trump term with your approach to the first one. And we all lived through it, and there were tweets that would lead to giant market swings or giant market reactions. What have we learned from living through that, the first 4 years of that first term? What have you learned from that you're going to take to this next term in terms of sort of what matters, what kind of concrete signs there are of policies that are being put in place or changed? How is your approach going to be different this time around, if at all?
I don't think it's going to be different. It goes back to, Ted Lasso, Walt Whitman, be curious, not judgmental. I remember 2018 so clearly. And, you did have this sense that perhaps we needed to get a little tougher on trade, that, we need fair trade, not free trade. And the first couple moves on tariffs, you felt like, okay, seems reasonable. But then things kind of got out of hand, and you had the Fed all of a sudden saying, hey, we're far away from neutral. In December of 2018, the market pulled back, 25%. We didn't panic at that time because we continued to look at the fundamentals, the valuation, and the technicals. And the fundamentals were still really strong. And valuation had come in quite a bit, so we were quite bullish. And ultimately, the Fed did the right thing, and ultimately, we backed off the tariffs. So, when we look at what's going on here, don't jump to conclusions that we're going to have a train wreck. Maybe we'll have a train wreck rather than a nuclear meltdown as we work through this tariff stuff. But, be patient. Be patient. Don't speculate and jump to conclusions.
Jeff, thanks so much for joining us. Jeff Krumpelman, he's a chief investment strategist and head of equities at Mariner Wealth Advisors. We have a Bloomberg correction here. John from Pittsburgh writes in to let me know that the equity markets close at 4 p.m. Wall Street time today, not 1 p.m. as I said earlier. So we stand corrected. The bond market does.
No doubt it'll be a busy 3 hours there.
Exactly. So thank you, John, for that correction there. With our news in New York City, here's Michael Barr.
Thank you very much, Paul, David, Lisa. It's already New Year's Day in New Zealand as people celebrate at the stroke of midnight around the globe. In the U.S., tight security is planned for New Year's celebrations, but no specific threats according to law enforcement. With 1 million people ready to ring in 2025 in Times Square, the New York Police Department is positioning to keep them safe. NYPD Commissioner Jessica Tisch.
The public can expect to see a tremendous amount of police resources deployed throughout the area and across the city.
That includes thousands of officers, bomb-sniffing dogs, and drones. Meanwhile, it is a sobering reminder on this New Year's Eve. Drunk driving accounts for nearly 31% of traffic deaths annually. That figure rises to nearly 40% during the holiday season, according to the National Highway Traffic Safety Administration. La Crosse, Wisconsin Police Sergeant Brooke Pataska.
Most of them are going to be alcohol related. So that could be like a trouble with party type call to people disagreeing. It could be, there could be some fights that way. Also OWIs, people driving while intoxicated, or crashes.
Sergeant Brooke Pataska also says slippery road conditions and drunk drivers also leads to more crashes. The U.S. Treasury Department was hacked by a Chinese state-sponsored actor through a third-party software service provider. That's according to a letter the agency sent to Congress yesterday. Bloomberg's Kriti Gupta has more on China's reaction.
The Chinese embassy over in Washington already kind of being very outspoken about this, saying, quote, smear attacks against China without any factual basis. The U.S. needs to stop using cybersecurity to smear and slander China and stop spreading all kinds of disinformation about the so-called Chinese hacking threats.
Bloomberg's Kriti Gupta. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Paul, David, Lisa.
All right, Michael Barr, thank you so much. We appreciate that. David, I'm assuming a raging New Year's Eve in the Gura household.
You know
today
it. No, they're a little too old to dupe them into thinking that it's midnight at 7 p.m. But I think we'll push it as much as we can. There's excitement for the event happening, but
what do we do? And I can't remember when my kids were that young.
We got the Martinelli's.
Yes, that's
apple
right.
cider,
there you
sparkling
go.
apple cider.
That's bringing back
raise a
memories.
glass with that, and there's supposed to be a block party.
There's always a block party in Brooklyn.
So we'll see.
And the weather, it's going to be a little rainy, but warm.
Block party with umbrellas, so maybe no bounce castles.
But it could have been so much worse with the dire cold and things like that. But there will be, as Lisa's been telling us, 1 million people in Times Square tonight. Good for them.
Good luck to all of them.
Good for them.
Yes,
absolutely.
Desire to be there.
All right, looking at these futures here. S&P futures up about 0.3%. Same for NASDAQ. 10-year Treasury yield pretty steady at 4.52% here. WTI crude oil steady at $71 a barrel. Tom's not here, so we'll do a quick Bitcoin, 95,000. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We've got futures pointing to a positive end to the year on Wall Street, setting stocks on course to build on this year's Wall Street rally. Let's start with NASDAQ futures up 0.3%, 65 points. Dow futures up 0.2%, 91 points. S&P futures up 0.2% or 17 points. We have the 2-year yield at 4.23%. That's down 1 basis point. And the yield on the 10-year, 4.53%. And that is little change. To commodities, Brent crude $73 a barrel. WTI crude $70 a barrel. We have spot gold higher at $2,612 an ounce. And the Bloomberg Dollar Spot Index on course for its best year since 2015. Right now, it's up about 0.1%. Few people making news at soccer star Lionel Messi. He carried out an IPO of his real estate properties, and that values the portfolio at just over $232 million. Now, the company has been listed as a REIT. It owns 7 hotels, commercial real estate, and houses. And Dunkin', getting some star power. Starting today, you can get an iced coffee inspired by singer Sabrina Carpenter's hit song, Espresso. And if that's not enough for you, a $5 meal deal. Different sandwiches plus a coffee. $5, not too bad. That is your Bloomberg Business Flash. Paul and David.
Sabrina Carpenter fan?
I guess not,
Don't know
Paul.
Paul doesn't know.
I'll be doing the Google thing. I'll be doing the
We're
Google
going to
thing.
have to play the song.
Hey, I mean, not for nothing, folks, but Bitcoin is up 4% today at 95,600. So for Tom Keene and for Matt Miller out there, I'm calling that out for those folks. Lisa Mateo, thank you so much. We appreciate that. David Gura sitting in for Tom Keene. We appreciate that. I'm Paul Sweeney, live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. All right, one of the themes in the marketplace for the last 2 years has been AI. The theme, exactly. And Alex Steele and I were up at a Boston Consulting Group offsite in Boston probably a year ago, and the consultants there were saying, when our clients ask us, how do we deploy AI in our business, they always say, no, before we get to there, we want you to commit to however you decide to deploy AI in your business, you do it responsibly.
Interesting.
Ethically.
Yeah.
We need that buy-off at the board level, at the C-suite level, before we're even talking about applications, because that's how powerful, potentially, AI can be for a lot of businesses. And I think our next guest thinks about that as well. Mark Weatherford, he is a vice president of policy and standards. The firm is Gretel. Mark, is it too soon to talk about regulating the deployment of AI across businesses? How do you guys think about that?
No, in fact, I think we're at this really interesting and unusual confluence of events with AI growing and changing almost weekly, and then the new administration coming in that wants to undo, slow down, and even stop regulation. So, but because of the risks, I think, to business and maybe society more broadly, we are definitely going to see regulation around AI, and what that regulation looks like, I think, is going to be the big question. And, because of the appointment, David Sachs and Krishnan, these guys are both entrepreneurs who have worked under the burden of regulation, and they're going to be in the White House. So I expect that they will try to moderate the legislature as much as possible. But at the same time, the risks of uncontrolled AI demand some kind of guardrails. And, legislators are going to do what they do best, and that's legislate.
Well, let's talk about those guardrails and where they're being built. So it's been happening at the federal level, I know, been happening at the state level. Then you got a lot of companies who say, look, we can do it ourselves. We have smart people working for us. We're keen to think through the potential philosophical implications of what this might mean, what disasters might be born of this. How do you see all of that shaking out? I mean, we haven't really been in a moment like this where we've had a really nascent technology like this and had the regulatory kind of structure being built around it in real time. Who's taking the lead here? Which guardrails are going to be the first up and the strongest?
Well, I'm going to answer the first part of that first. And that is, I think, it's been proven over and over again, self-regulation is not going to work. I mean, organizations don't just simply regulate and do the right thing because it's the right thing to do. So there are going to be some guardrails around. Now, in this year, 2024, there are over 200 bills in the U.S. Congress related to artificial intelligence. At the same time, there are over 700 bills at the state level across 45 different states. And I think 113 states actually passed laws this year around AI. So I think we're going to see it's going to happen much faster at the state level simply because it's easier to get legislation done than at the federal level. But at the same time, when the safety of society is at risk, and I'm not saying that that AI presents that kind of a risk, but when the safety and security of society is in question, legislators are going to do something about that, and especially when there are so many people out there and so many organizations out there that are in fact raising their hand and saying, "Hey, let's kind of take a slow approach to this." So there's going to be some influence to slow down, but at the same time, put these guardrails in place.
What are we regulating today? What should we be regulating today? Is it data privacy? What should these regulations cover, do you think?
Well, I think a couple things, and you hit on the right one. AI is data. AI doesn't exist without data. So what we're regulating, what we need to regulate is how is data being used? Where is the data coming from? Is it sensitive and private data? Is it already regulated by GDPR or California Consumer Privacy Protection Act or some of the other local laws in place already? So data is the key here, and that really is what we need to regulate from a privacy perspective, so that people know if their data is being used, how it's being used, when it's being used, and why it's being used.
I go back to what Paul was saying at the top, the conversation that he had that Boston Consulting Group meeting where, their barrier to entry was, is the board on board with kind of parameters to govern this? Are we close to having any sort of standardized formula for that across business? And if not, where should an executive look for some guidance on what a company should be doing to do this kind of safely and most effectively?
Yeah, I think there's two things there. First is there is no standards yet, although the National Institutes of Science and Technology have put out some guidelines on AI and the use of synthetic data. But from a purely business perspective, from a board member's perspective, they're always enticed by what's new and what's fancy and what's sexy. And I think AI is certainly that right now. But I think what you're talking about there is, what is the business case? And I think a lot of times companies are reaching and trying to find that business case and maybe put the square peg in the round hole and try to make the case for it. There are a lot of great business cases for artificial intelligence, but I think board members need to do exactly what you just said, and that is, what is the real rationale for investing in artificial intelligence? I think there's great business cases for that, but maybe not in all aspects.
What are your expectations of the new administration as it relates to AI?
I think I'm optimistic. Like I said earlier, David Sachs and Sriram Krishnan, these guys are they're technologists. They are AI professionals as well as anybody can be. So, and I think far too often political appointments are made to influential people, to friends, or people who donated or helped the campaign regardless of their experience. So I'm optimistic that we actually have people in these AI roles that have real experience. Now, again, working with the legislature is a different story, the executive branch and legislative branch. So I think they're certainly going to try to influence legislation coming out of Capitol Hill. And that's where, it's going to be some interesting dynamics. We're kind of at a crazy time right now with this new administration coming in that's doing things completely different than have ever been done before.
Right. Yep. All right, Mark. We will pay attention along with a lot of other folks. Mark Weatherford, he's a vice president, policy and standards. That firm is named Gretel, talking about cybersecurity and the need for regulation, particularly as it relates to AI. All right, we're going to have more coming up. Who knows what's going to happen in the 9 o'clock hour. This is Bloomberg.